Hi all and welcome to our weekly report. We have a busy week ahead of us, which starts with fairly light calendar on Monday. RBA interest rate decision, various European and also UK services PMI data releases, and US ISM non-manufacturing data are the main point of interest on Tuesday. Australia GDP figures, Bank of Canada interest rate decision are all due on Wednesday. Eurozone GDP, employment, ECB interest rate decision, which is followed by monetary policy press conference, will likely impact euro currency crosses volatility on Thursday. The week will finish on Friday with Chinese trade balance and probably the most anticipated event for this week, which is US non-farm payroll data, employment and also average hourly earnings data, which could impact volatility across US dollar currency crosses and also US equities. Now, let's take a look at few markets. This is the intraday price for US dollar index. It appeared to be forming this topping head and shoulder pattern. And last week we were talking about the major point of interest, which is this neckline area of the topping head and shoulder pattern around 96. The price is currently retesting that level from underneath as a newly found resistance. If we see the end of day breakout above 96, that would potentially negate the existence of this topping head and shoulder pattern and open up the way for the retest of 96.40 on the upside initially, followed by 96.90, possibly even 97 or 98. Alternatively, if this neckline holds at 96 and the bears return and the price is pushed lower, the initial downside is supported at 95.60, followed by 95.30. Confirmed loss of those two levels would open up the way for a deeper retracement towards 95 initially, which is the cluster of these lows here, followed by 94.47. This type of reaction could be triggered by non-farm payroll on Friday. Now let's take a look at euro dollar. Euro dollar appears to be forming a rising wedge in 4 hourly, therefore the intraday time frame. The price action appears to be bearish in end of day time frame. The daily candles are pointing to some selling pressure at the moment and a sideways price moving, which is capped by 1.1380. That could also be referred to as a loss of this rising support and then retest of that from that level from underneath. So major level of resistance at the moment at 1.1380. If the price carries on moving lower, then the initial downside is supported by 1.1330. Confirmed loss of that level would open up the way for the retest of 1.1287, possibly even 1.1250, 1.1230 to the downside. Alternatively, only a confirmed breakout and a spike higher inside of this trading range is initially capped by 1.1425 above that 1.1383. Only the end of day close above that level would potentially create another higher high, and that would open up the way for the retest of 1.15, 1.1520. Just to confirm the additional reason for that 1.1380 to hold resistance or to be considered as a significant resistance is if we take the fib retracement from this swing high to this swing low, which is what I did just here. Our 50% fib retracement lines up with the intraday R1 in pivots and also that horizontal level at 1.1380. Now let's take a look at cable. Cable appears to be moving higher from the intraday point of view. It's creating the sequence of higher highs and higher lows. It's initially supported by this rising support trend line and also 50 period moving average in 4 hourly. The big level for the bulls at the moment is at 113.50. They appear to be in control above that level, potentially looking for a confirmed breakout higher above the initial resistance at 1.3240. The 4 hourly or end of day close above that level could potentially be seen as a bullish breakout of this bullish continuation pattern, potentially pointing to one spot 33.45 as a next level of resistance on the upside, followed by one spot 34.50. Alternatively, only a dip lower and end of day close below one spot 31.50 would negate this intraday bullishness and potentially open up the way for a deeper retracement towards one spot 30, possibly one spot 29.40, possibly 128. Dollar Japanese yen appears to be nice and bullish. We saw a breakout above that 111.20 level and the price moved higher and reached the initial upside resistance at 111.80. Bulls appear to be in complete control above this area here, so the major support at the moment is at 111.30, which happens to be 200-day moving average. So any over bought pullbacks from the current levels are initially supported down here, 111.30, 111.20, possibly even 111 to the downside, where bulls would likely return and look for a bullish confirmation breakouts higher. Only a deeper retracement towards 110.70 and the end of day close below that level would negate this current end of day and also 4-hourly bullish sentiment. Alternatively, either a controlled pullback from the current levels and a bounce, or a breakout above the current highs would initially be capped by 112.20, 112.50. Confirmed breakouts above that level would open up the way for a spike higher towards 112.85, 113 to the upside. This is Euro Sterling. Euro Sterling appears to be under some severe pressure from a monthly and weekly timeframes point of view, because the price is currently creating something that looks like a rising wedge in overall downtrending market, which is signified by the sequence of lower highs. The price action is currently trading below falling multiple moving averages, and it's currently testing that weekly and monthly swing low at 86. Confirmed breakout lower and end of day close below 86 would incentivize bears to come in and engage, potentially targeting initial downside supports at these lows at 85.30, possibly 85. Confirmed loss of that 85 would open up the way for a deeper retracement towards spot 84.30, possibly even 83.60, which would be a 200-week moving average. Alternatively, only a breakout above this falling resistance trendline and end of day close above 86.40 would negate the current intraday bearishness and possibly open up the way for a spike higher towards spot 87, 87.44. Lastly, I want to talk about gold. Gold appears to be in corrective pullback at the moment from 1340, 1330 levels. The end of day time frame important support is at 1306 or 1300, which happens to be a 50 DMA level, which is this zone up here. So any oversold bounce backs are initially capped by this zone here. Only a confirmed breakout and end of day close above that level would potentially open up the way for a retest of additional upside resistances towards 1317, possibly even 1330, and then 1342. Alternatively, either a rally into that resistance and a pullback, or a gradual pullback from the current levels is initially supported by 1280, 1275, possibly even 1245 to the downside, which would be 200-day moving average. Thank you for watching. Thank you for listening. Stay safe and happy trading. Bye for now.